The countdown to the biggest event for India's economy has begun. As 2025 has already drawn to a close, all eyes are now on the Union Budget of 2026. India has entered this budget season with strong economic momentum, faster growth, low inflation and record foreign exchange reserves, giving policymakers room to now maneuver in 2026. So the big question is, what does the data really say as of now? And here's everything that you need to know in the run-up to the budget 2026 and how India's growth story is emerging. India's GDP growth engine has been firing on all cylinders. In the first half of financial year 2026, the real GDP grew by 8% according to the government estimates. The quarter 2 growth stood at 8.2% and that exceeded the expectations. The Reserve Bank of India has also now raised its full year GDP growth forecast to 7.3% for financial year 2026 as well. This growth has been definitely broad-based. We have seen that services industry has led the expansion. The agriculture industry has also provided steady support to the growth. We've also seen strong domestic demand, consumption recovery and policy support have all driven this momentum heading into the budget of 2026. The next part comes in as far as inflation is concerned. That's well below the danger zone now. Inflation remains as India's biggest positives. Retail inflation for India now stands at just 0.7% as of November of 2025, well below the RBI's 4% comfort level. The RBI now expects the average inflation of around 2% for financial year 2026. Lower food prices, the GST rate rationalization, stable supply chains have all helped to keep the prices under control, giving policymakers more space to focus on growth rather than just firefighting inflation. Let's also talk about fiscal deficit, another key monitor. Walking the tightrope has been the government's focus. The fiscal deficit remains a key focus even for budget 2026. The government has already set a fiscal deficit target of 4.4% of the GDP for FY26 and that translates to about 15.6 lakh crore rupees. As the capital expenditure picks up, remember by October of 2025, the deficit had just reached to 8.25 lakh crore rupees or about 52.6% of the annual target. Now, the finance minister has reiterated confidence that the 4.4% fiscal deficit target will be met by March of 2026, backed by steady revenues and also the expenditure control as well. And now let's talk about trade, exports, forex reserves, also very important. On the external front, there are some mixed signals. India's trade deficit has widened to $196.8 billion between April to October of 2025. Exports have fallen by nearly 12% in October, while imports rose over 16% year on year. But there is a strong cushion also. We do see that the foreign exchange reserves have risen to $693.3 billion as of December 19th of 2025. The Reserve Bank of India now continues to actively manage volatility and ensure market stability as well. The next portion comes into tax, GST and tax collections, and the revenues hold firm there. Tax collections have continued to support the government's fiscal roadmap. The gross GST collections for November, remember, stood at 1.7 lakh crores, up 0.7% on a year-on-year basis. The direct tax collections rose by 8% to now 17.05 lakh crores so far in FY26. And despite the GST rate rationalization and improved compliance and formalization are all keeping the revenues resilient. Let's also talk about RBI's policy and the liquidity outlook that will also be touched upon in the budget. Monetary policy has already done much of the heavy lifting in FY26. In 2025, the RBI cut repo rates by 125 basis points, bringing it down to 5.25%. With inflation now under control, rates are actually expected to remain accommodative through early calendar year of 2026. Now, liquidity injections are likely to continue to also give support there. The credit growth, that's also something to be watched out for. Investment activity, also the consumption momentum, all of these three will be monitoring factors as well. So as India heads into the Union Budget of 2026, the macro picture is relatively strong. High growth, low inflation, stable finances and ample reserves there. Also, the key challenge for the government will now be on balancing the growth with fiscal discipline while using this window of stability to push for further reforms, capex, long-term competitiveness, and all of that will have to be watched out for in the budget speech. The stage is set, the expectations are now high, and Budget 2026 will define the next phase of India's growth story.
If you like the video, do like, comment, share and subscribe.